Capital good stocks, especially the quality capital good stocks, are in focus last couple of days. Last evening, in fact, the last hour of trade yesterday saw Cummins coming under a bit of a pressure, and that was not to do with the kind of quarterly results actually they've given out. It has what made some certain section of the market a bit nervous was the reason that they abstained from giving out guidance. So we are scratching that point, and of course the operational performance this time around and trajectory with Ashwath Ram, MD, Cummins India, who is joining us today. Mr. Ram, thank you very much. Namaskar. So nice to see you. I like the smile on your face. It will actually assure a lot of shareholders who have been rewarded holding your stock for long term, and the structural tailwinds behind your sector and your company. But what made a certain section of the market bit nervous was that you abstained from giving guidance, saying there are a lot of uncertainties. Can you help us understand that? Because long-term shareholder will stay back. If you could explain that issue of uncertainty a little better.
Yeah, the biggest uncertainty from our minds are that in this year we are going to go through some transitions which are technology transition. After nearly 10 years, we are going to change the emissions technology for power generation goes from CPCB 2 to CPCB 4 plus, and that goes into effect from July 1st. And so there's a period of July to December when the new product will be launched, but the old product will be allowed to be sold in that time frame. So there's going to be a pre-buy which is happening in this quarter, and then there is likely to be a dip in demand which will then pick up once the old inventories are all fixed up. So usually those periods are very uncertain. The markets we have seen in different parts of the world, they correct anywhere from 20 to 40%. And since we are not sure how the local market will react to that, is why we are hesitant to just come out and give a forecast. But broadly, we have said that we continue to have the ambition to grow at 2x of the GDP and continue to improve our profitability margin. So we are seeing pretty good and strong demand across the world. So I don't see any uncertainty on how we as a company continue to grow.
Sure, Mr. Ram, point taken. But just to understand that better, given the fact that the old CPCB, engines have been allowed to be sold till the month of December, wouldn't it result in a lot of pre-buying in the coming quarters as well? And secondly, with respect to the price differential of the 4 norm versus the 2 norm, what's the price differential? What will it do to your margins?
Yeah, so we do expect the pre-buy to be very strong in this quarter. We did have a weak pre-buy starting in the earlier quarter, but usually that quarter is before the summer months, so the purchases were not that strong. But this quarter we are seeing unprecedented demand. Most of it, I think, is part of the pre-buy. As far as margins are concerned, we expect prices of the new product to go up anywhere from 20 to 50%, and we have been consistently having the aspiration that we will continue to hold margins or continue to increase margins year on year based on both internal cost management activities as well as providing better products and better services to the market. And we think the CPCB 4 is significant technology change to enable us to do that and move away from a more commoditized type of product.
Mr. Ram, just to get it right once again, that this is a up to 6 month period of uncertainty in demand because of change in tech. So it is very seasonal dip, not a structural dip which you are talking about, right?
That's correct.
And that too gets adjusted because of the pre-buy which will happen. So there is no change in the structure of the business direction, right?
No, and this is a cycle which we have seen in multiple markets around the world when emission transitions take place. So overall, we remain really optimistic about the future of our business in these spaces. Pretty much all the aspects of India which allows the GDP to grow, which is growth in infrastructure, growth in the requirement of power, growth in commercial marine growth, in construction, growth in rail, pretty much every aspect of that works for Cummins in its own growth journey. So we remain cautious, but highly optimistic about the growth opportunities.
Always wondered what the term cautiously optimistic mean. It's a bit of an oxymoron, Mr. Ram, if I can say so. But nonetheless, I wanted to understand. I understand you are saying this energy transition is not a structural issue. But what is a structural issue is the fact that people are moving away from diesel gensets, etc. Whether it's the construction sites or the latest notification coming in Delhi, etc. That's expected to have a meaningful impact structurally as well. Your take?
Yeah, so this is not a cliff event, but a journey, and it's a journey which Cummins calls Destination Zero. And countries like the United States have already announced that they will be uh, zero emissions kind of countries by 2050. And India, in its quest, has said that we will be zero carbon by 2070. And so the technologies are already being developed to handle that kind of transition. In the markets that we play in, we think that it's going to be in three phases. Now, when the technology is being developed, where we actually see consolidation in the existing portfolios that we have, and we see even greater opportunities than we've had before. Then the medium term, where multiple technologies will compete, and you will see a phase where different technologies will be introduced by us to cater to different market segments. And then the latter phase, which is 2040 and beyond, where we will get scale and we'll be able to deploy some of the new technologies. So we think it's a long journey. It's a 25 to 30-year, 40-year journey. So there is the short term actually is very, very good for our existing portfolios.
No, and just before I let you go, Mr. Ram, because of the paucity of time, could you talk to us about where the EBITDA margin are likely to sustain? Because this quarter was very good at 17% margin profile. Could it continue? And is there a chance there could be revenue dip in FY24 because of this entire transition in the domestic business?
We don't think there could be a revenue dip. I'll answer that portion first. We continue to see strong order boards in all market segments. So we don't see any revenue drop, even with these cautious scenarios that I talked about. We still see that the overall GDP continues to grow pretty aggressively. So we will also continue to grow. As far as margins are concerned, it has been a steady journey. We have committed more than a couple of years ago that we will continue to work on structurally improving our cost structure to be able to have better margins, and we will continue to introduce market-beating products, which will also allow us to maintain or improve margins. So I think all of those things are places where we are doing work on, and I'm quite excited and happy about the progress we have made with our new products. So I remain positive and optimistic that we will continue to maintain or improve margins.
Right. All right, Mr. Ram, we'll let you go on that one. Thanks so much for joining us. I was just looking at your 5-year chart, and it has more than doubled for shareholders who have stayed back and have absorbed these seasonal headwinds which erupt time to time for any business for that matter. Thanks for all the explanation today.